Oh, look at everybody that's here. Hold tight, hold tight. Just hold tight a second. I'll be right there. Okay, live, 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 live. And, what am I doing down here? Come on. There, that, and there we go. We'll be right there. Hold 1 second. Still getting signed up, getting signed in, getting logged in, getting logged in. What do we have here? There we go. And there we go. All righty. All right, let's see who's in the house. Who is in the house tonight? Let's see this. Logical Card Dud, Nelson, Sherry, Amador Marrez, good evening. Manifesti, Joker, Patrick, Realty Income. Ooh, want to jump to the big guns, huh? Oh, Realty. We'll take a gander at that one. Sit tight. You guys here over on YouTube 1. Hang. David and Lisa, cool beans. And Joe Flo Biggins. Good evening, Joe Flo Biggins. Who do we have over here? Clint, Markin, The Christian, Mike, Inner Coach Fines, cool beans. George Dupuis, Vinyl, cool. Nico, what's happening? Who else do we have here? The Mike, Sean BB7, Joni, good evening. Emmy, James, Z Kings, what's happening? Shell, good evening. Nick, Wampa, good evening, Wampa. Z Kings. Now we got Grandpa doing rugs. That's some funny shit. Dr. G, what's happening? James Dupree. Elate Trading, good evening. Alphonse, Frank, Rogue Man, Just Curious, back again. Tawny Carr, what's happening? Will Brooks, Chris, Kenneth, good evening. Lisa. All right, finally caught up. Applesauce, Apple user. Mike, good evening. Apple user wants to take a look at Budweiser. We looked at Budweiser last night, and last night it was a no, so I'm not quite sure why you're thinking tonight's going to be any different. Let's take a look. BUD, Budweiser, check that out right there. Okay. Anheuser-Busch, Budweiser. It's going to be a no. And the only reason why Budweiser is going to be a no is look at where it is. It's at the high of the year. Now, don't get me wrong, it may be a good opportunity otherwise, but to me, it doesn't make any sense whatsoever to buy something when it's at the high of the year. It just doesn't make sense. Sorry. Dave, Macy's. We'll take a look at Macy's. We got a big list from last night, too. Disgruntled Cook, back again. My Apple is skyrocketing. Cool beans. KB, what's happening? AAPL. Take a look at that one. Uh-oh. David wants to look at Lockheed Martin. LMT, and then AGNC. AGNC. All right, let's get rolling. Let's get started. We just got here. John Werner, how are you doing today? KG4, what's up? All right, just getting started. Good evening, ladies and gentlemen. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. I want you guys to understand a few things as we get rolling. Number one, I do answer each and every single individual question as the night progresses. So please ask your question only once. And if you do, make sure the stocks you want me to take a look at have at least 2 decades of profitability and weekly options. That's my 2 criteria. Only 2. Consistency of profitability and weekly options. Other than that, it just doesn't make sense for me. Now, I'm looking for cash flow, so you will not be looking at stocks that have capital appreciation. If that's what you're looking for, you're in the wrong place. I appreciate you being here. I appreciate you entertaining and asking questions and interacting. But if you're looking for capital appreciation, you're in the wrong place. Okay? I'm looking for cash flow only, not stock appreciation. I don't want people wasting their times here. Kenneth, good evening. Anya, evening. KB, have you taken a look at Hinge? It goes public tomorrow. Okay, so Jake, if you're telling me Hinge goes public tomorrow, well, then it wouldn't be even consideration for at least 20 years. Because I don't invest in things unless they're at least 20 years in the profit section. Free the oppressed, fattish cash flow producer. Cool, thank you. Verizon, let's take a look at that one. We'll take a look, wrote it down, we'll take a gander. So, for that being said, I'm going to show you a trading strategy that I created for my 9-year-old daughter back in 2008. Okay, when she was 9, she's about 26 now. When she was 9, she said, Daddy, what are you doing? Can you teach me? So, teaching a 9-year-old to invest in the stock market when most adults don't understand it, it was a challenge. So, I had 5 criteria that I had to overcome. Number 1, it had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. Now, when I say that, a lot of people get a little uncomfortable when I say no way for her to lose. Well, it's pretty simple. Never buy a stock that you don't want to hold on to for the rest of your life, and make sure it's a good quality company. With that being said, I don't see Coca-Cola going out of business anytime soon. Pepsi, IBM, AT&T, Verizon, whole bunch of companies. There's over 10,000 different companies that we can invest in. So I don't look at all 10,000. I only look at those that have 2 decades of consistent profitability. That means 2005, 2006, 2007, 2008, 2009, 20 years. 1 year profit better than the previous. Every number going higher and higher and higher. And yes, out of 10,000 different companies, there are plenty. Okay, there's over 300 that I know of that I keep my eye on. And that's it. If it's not on my list, I don't even bother with it because it just doesn't fit my criteria. And it's kind of weird. I have two requirements and only 2. Consistency of profitability and weekly options. So out of 10,000 stocks that are available, I'm only looking at about 300. That's it. Okay, KG4. Okay, we're not doing Target might go out like Walgreens. It might. You never know. We'll take a gander at it. It's on the list. Yep, Target has problems. Probably does. Hey, fish pick. Nice going. All right, anyway, let's get started. Let's start taking a look at some stocks. I do covered call basically on dividend stocks. That's where you get the name, Dividend Stock Talk. I like to invest in dividend stocks only because they share their profits. When they share their profits, makes me happy because I get weekly cash flow. Weekly cash flow helps me balance out my books and allows me to live a comfortable lifestyle. Yep, we're going to take a look at Verizon in a little bit. So, first and foremost, let's go. Let's take a look at that list. Well, somebody asked me about BOAT yesterday. Yeah, hell no. IBM. Gonna start off the first one with a big fat no. Anyway, second one, IBM. Check it out. I'm going to say no to IBM really quickly. Not that it's not on my list, because it is on my list. Love IBM when the timing is right. Well, look at where it is now. The high was just a couple of days ago. Now it's pulling back. So once the profit is taking place, this thing's going to start coming down. Once it does, maybe we'll look at IBM in 2 weeks, but not this week. IBM. All right, 2 weeks, IBM. Next on the list, AbbVie, ABBV, AbbVie. Love AbbVie. Look at it, the high, a little low. Where was it? Where is it? Look at the motion, up, down, up, down, up, down. What's going on here? It looks like it might not be that favorable. So let's zoom in real quick. Yeah, that's going to be a no. Okay. Here's your bottom. Here's your top. She drops down, retraces, and pulls back. It's still in that downward trend. So AbbVie next week, maybe. Maybe we'll take a look at it next week, see what it looks like. Next. Pepsi. Pepsi. Now, we've been waiting for Pepsi to find that bottom and turn around, and she did, but what's going on? Not quite. Well, let's take a look. Here's the high. Uh-oh. I can't see it. I got to move something. Sit tight. Hate when that happens. All right there. There we go. That works. All right. Here's our high a year ago. Here's our bottom a couple of weeks ago. Just down, up, down, up, down. What's going on here? Is that going to give us an indicator what's going on? I don't know. It just might. Hold that thought. Can you explain more about what filters you have on your platform view? What filters I have on my platform view. Okay. This is the 1 year, 1 day chart. It looks at one whole year, 1 day at a time. This over here, let me change that. That is just the stock options and the strike prices, ate them. I'm not really quite sure what you mean. There's nothing really interesting about it. It's a 1 year chart, and this is just the option chain. Okay, when I say I created this for a 9-year-old, well, in the first thing I said, it had to be simple and it had to be safe. So whenever you open up your trading platform, Thinkorswim, well, the preset or the default is 1 year, 1 day. So we're looking at 1 day at a time. Now, I could change it, but why? I've been using the same thing for almost 20 years. Why would I change it? See, I grew up with, if it ain't broke, don't fix it. Okay? If it works fine, leave it alone. I have no interest whatsoever in shiny new objects. I don't care how to make things simpler, easier, faster, better, because I don't trust technology. I don't. It's not weird. I'm here. I'm technology. Yeah, but see, I don't trust it. So I'm trying to make it as simple as possible for a 9-year-old. So what's going on with Pepsi? Let's take a look. I didn't know. That's why I asked. All righty. Thank you. Oh, I was asking. Okay. Been a while, Captain Obvious. Yes, it has. Hey, sorry I'm late. Cool bean. Antoine, good evening. James, I think they are just asking what screener or platform you use. Wasn't quite the question, but I get what you're saying. This is Thinkorswim, and I use just the presets. I don't use any. I don't know 95% of what's going on Thinkorswim. There's so much information on this platform. Well, 99% of it, it's irrelevant to me. It has nothing to do with what I'm doing. Okay, so why would I bother looking at something that I'm probably never ever going to use? If you find something that works and it works consistently and it works consistently for years, well, why do you want to change it? One thing I can't stand more than anything is when companies go and take something that works perfectly fine and saying, well, we fixed it, we made it better. Well, why don't you just make something new, just leave the old damn thing alone? I loved Windows 95. Windows 97 was okay. Windows 98, not so much. Didn't really like Windows 10. But I would have kept on using Windows 95 if they just left it alone. All right, let's keep on going. My bad. All right. I use Thinkorswim, and that is why I asked about the filter. Damn. Yeah, I don't use the filter. Okay. I pick Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Okay. That's all my criteria. Are they consistently profitable? Do they have weekly options? It's really not that difficult. All right. How many shares do you buy at a time? Average share price. Oh, Captain Obvious. I like to stay below $50,000 per position. So sometimes it's 10,000, sometimes it's 20, sometimes it's 30, sometimes it's 5, sometimes it's 43. I like to keep each position below 50,000. I got to have some room for dollar cost averaging down if and when the time may occur. Can we get to it? Yes, I'd love to get to it if people just stop asking questions. All right. I'm going to say no to Pepsi only because we thought this was the bottom. Okay? She went up for 2 days. Now she's going sideways, coming back down. So for me to isolate a bottom, I want a bottom in 2 days to the upside and then jumping in on the third day. Well, this never had a third day to the upside. So we're going to sit and we're going to wait and watch Pepsi again and see if there's a bottom. So no to Pepsi for this week. Next on the list, MRK, Merck. Now, I did buy some Merck this week because the numbers just looked good. MRK. Let's take a look. All right. Here's the high. Here's the low. Here's where it was. Here's where it is. This one's simple. Look at this. Down, and then it's bouncing off the bottom. If you want to make money in the stock market, you're going to hear it over and over and over until you're sick of hearing it. Buy low, sell high. You can't get any lower than the low of the year. Now, how do we know it's the low of the year? Well, we kind of really don't. Because this could have been the low of the year. She went back up, but nope, she went back down. This could have been the low of the year, but nope, went up. See, this could be doing the same thing. It could be the low of the year. We just don't know until it keeps on going forward or keep going higher. Okay, there's no guarantees in life, and this, at this moment in time, looks as if it is the bottom of the year. Does it make sense for you? And that's a big question. Do you ever buy the stock even though it's not ready to sell calls, but it's at a low price? Absolutely not, Mark. Every single position I have. Hold on a second. That was a good one. Mark, every single position I have, I write a covered call against. Every single one. There's never, well, at least for the last 15 years, there's never been a stock I just bought to see if it went up. Nope. Had as a dividend, and there's a way to get cash flow from it on a weekly basis. Okay? So, let's take a look. A year ago, Merck had the high of the year at 135. Okay? Look where the bottom was. That was on the 15th, 72.83. That was the bottom, and that was just, last week? All right, well, look at the last 90 days. Last 90 days. Here we go. High, low, where was it? Where is it? Look at the motion. Up, down, up, down. Now she's going up. What happened today? I'm kind of curious. Look. Let's zoom in really tight. Okay, here's the last 30 days. We're here at 78, jumps up to 86, drops down to 73. Now she had 1, 2, 3, 4 days to the upside, and today pulled back. Why did it pull back today? Well, I already jumped in on Monday because we had 2 days to the upside. See, 1, 2. Monday was day number 3 to the upside. So if on the third day it's higher, yeah, that's when I jump in. So I did. I jumped in. Well, well, surprise, surprise, it pulled back today. Am I worried about it? No. The reason why I'm not worried about it is rule number 1. Now, remember, I told you the 5 criteria. Okay, simple, safe, predictable, consistent, no way for her to lose. Well, came along with 5 rules. Okay, and I was very strict with my dog with these 5 rules. Rule number 1, if it's not on the list, don't buy it. Now, when I say if it's not on the list, I created the list for my daughter. Dividend Kings. Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there. You can search any search engine. I use Google, so I went to Google, and I put in Dividend Kings List 2025. Lo and behold, somebody spit out a list of all the dividend kings. So for my daughter, the 5 rules. Rule number 1, if it's not on the list, don't buy it. Rule number 2, never sell at a loss. It defeats the purpose of the game. And yes, this is a game, believe it or not. 3, make sure the company's consistently profitable. Well, for my daughter, it was a little bit different because if it wasn't profitable, it wouldn't be on the list in the first place. And rule number 4, weekly options only. Again, on the list that I provided for my daughter, everything had weekly options. And then rule number 5, make sure the numbers work, which means what's going on in the chart. What do these numbers look like? And we're going to get to a couple of trades tonight so you see exactly what I mean. So you can basically do this on your own after watching a couple of minutes. Okay, it took my 9-year-old about 10, 15 minutes to understand it. Number 1, pick out a good list of stocks. Something you don't mind owning for a long period of time. Number 2, put it into the calendar to know when they're going to pay their dividend. And that was the key, because the stock, a dividend stock specifically, has a tendency to go up in price just before the EX dividend date. Well, let me go back to this for a second. Whoops, wrong one. I wanted to do this, and then I wanted to do that. All righty. Here is a calendar right behind me. Behind me, June 2025, because we got dividends coming up in the month of June. Each one of these green dots represents a company that has been profitable and is getting ready to share their profits through a process called paying out a dividend to the shareholders. That's what it is. A dividend is a profit the company gives to the shareholders, and that's you and I. Once we start buying and selling the stocks, we become shareholders. Okay, there's 4 dates to remember. Date number 1. Okay, date number 1 is going to be the dividend announcement date. That's when the company comes out and says, hey everybody, this is James from Dividend Stock Talk. We had a great year this year. This is how much money we made, and this is the dividend we're giving back to you on this date. Well, that's the announcement date, date number 1. Date number 2 is called the EX dividend date. That's the last day the stock trades before the dividend is paid out. So, in short, if you want to collect the dividend, you have to buy it before that date. Okay, so we're looking here, CINF, Cincinnati Financial. See how it's highlighted right there? It's got a dividend of 87 cents per share. Lovely. But if you want to collect that dividend, you have to buy it before the 23rd. The 16th, the 2nd, the 11th, the 9th, the 18th, the 20th, whatever, as long as it's before this date. Date number 3 is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Plain and simple. Date number 4, the payment date, that's when you get your money. 4 dates. So, for my daughter, if it was on the chart, those are the only ones we look at, and those are the only ones we buy. Because it wouldn't have made it to the chart if it wasn't profitable. It wouldn't have made it to the chart if it didn't have weekly options. What am I missing here? Do I need a financial advisor to invest in something like this? Nicole, no, you do not. Now, Nicole, let me give you a little bit of advice. Now, I usually don't give it advice, but this is what I'm going to give for you. Education is key. Ask as many questions as you need to feel safe about what it is you are doing. Never blindly listen to some guy on YouTube or TikTok. Okay, I'm just giving you information. Write it down. Do your research. Do your fact checking. Does it make sense? That's question number 1. Question number 2. Do you think you can do it? Actually, that should be question number 1. Do you think you can do it? Okay, now question number 2, does it make sense? Question number 3, what companies do you like? And are you willing to buy and hold for the rest of your life? Because if you're not willing to buy a stock and take it to your grave, then don't put your money into it. Okay? We change our time for money, and then we take our money and we put it someplace where we think it's going to grow. Well, as a retired person, I can tell you, you got 2 choices when you get older. and only two, and don't think you're someone special. I'm not picking on anyone, but you ain't anyone special. You got two choices and only two. Do it yourself or let somebody else do it for you. Okay, I hate to be so bold, right to the point, but I grew up in a time where, oh, that's what it was. You know, it is what it is. Terribly sorry if I'm offending anyone. There's no safe spaces here. So if you're easily offended, you might as well leave now. Okay, sorry, but it is what it is. There's no sugarcoating anything. All right, so hope that makes sense, Nicole. Okay, understand what you're doing. Make sure it makes sense to you. Lone Wolf, dude, I haven't heard or seen from you in a while. Do you personally teach people how to successfully trade for fee? Of course, just curious. Well, of course. But here's the thing, Lone Wolf. I'm not trying to sell anything here. Okay, we're all adults here. We know how this works. Yes, I've written books. Yes, I got a course. Yes, I have this. Yes, I have that. But I'm not going to try to sell you anything tonight. Tonight is just for education. Also, I'm creating a video log for my children and my grandchildren. So this is just one of those things that you get to participate in. Hi, guys. Just another day. Anyway, so let's keep on going. Joker, are you buying Pfizer? We'll take a look at Pfizer. Blue Veracity. Do you roll your calls to avoid having your shares called away when you want to keep your position? Absolutely. But the thing is, Blue Veracity, every position I look at, it's always, always, always going to be a numbers game. It's an equation. Where am I? What did I buy it for? What did I sell it for? Where is it now? Does it make sense to roll it? Does it make sense to let it expire? Does it make sense to let it get called away? Okay, we answer all those questions on Friday afternoon, only because I like to make sure that nobody in my group loses any money. I have no control over which buttons you guys push, but if I can guide you, I can take a look at your situation, and then I can say, hey, did you think of this? Did you think of that? What if this happened? And no, JEPQ and SCHD, have you even looked at the numbers on that, dude? Seriously. I tell everybody, you need a financial website. A financial website. I use Yahoo Finance. Hold that thought, Joker. I got to point this out to you. You're new here, and I really hate to think that you're doing something you really don't understand. JEPQ. Okay, what we're going to do quickly. JEPQ. Hold that thought. Okay, JEPQ has a yield at this moment of 11.23%. The year-to-date total return for JEPQ at this moment in time is negative 3.22. Well, that's just getting started. It gets worse. Really does. Now, remember when I say I like companies that have 2 decades of consistent profits. Okay, so now we're going to take a look at historical data. Historical data is basically exactly what you think it is. Okay, it's the history, the high, the low, let's go back up here. Okay, the date, the high, the low, the open, the close, the adjusted, the volume. Everything you want to know about the stock, the opening price, the closing price, the high of the day, the low of the day, every single day. It's posted right there. But what I want to look at, historical prices on dividends, because you got 2 choices. One, you like that 2 choices. You got 2 choices everywhere. It's either this or that. Okay, this or that. You get 2 choices. Number one, you can read all of the quarterly reports and all the annual reports to see how profitable the company is. That's number one. Or you can go directly to the dividends. Because here's why. A dividend is nothing more than a portion of the profits the company gives back to the investors. So think of it this way. If the company is more profitable, they share more of the profits with the shareholders in the form of a dividend. So if the dividend consistently increases, year after year after year after year. Well, logic, reason, and common sense tells me that if the profits are increasing, the dividends are increasing as well. So I don't have to read the annual reports or the quarterly reports. I don't have to do that. If the dividend is higher, it means they made more money. It's actually that simple. Okay, adults have a tendency to complicate everything. So anyway, you're not off the hook yet, Joker. Hold on, hold that thought. We are here looking at JEPQ and how consistently profitable they are. Because if you remember from the beginning, I have two criteria and only two. Weekly options, which JEPQ has, and 2 decades of profitability, which JEPQ does not have. Okay, the maximum dividends for JEPQ, May 4th, 2022 was the first dividend they paid out. Now, 2022 to 2025, this thing's not even 3 years old. So, Joker, explain to me what is so wonderful and so great about a 3-year-old company you entrust your money to. I'm just curious. But, hold on, it does get worse. Let's go all the way back to the very first dividend. Now, when I say consistency of profitability, that means every single dividend should be higher and higher and higher and higher and higher and higher. Okay? Consistency of profitability means you make more this week than you did last week. And you make more next week than you did this week. It's progressing forward. So let's take a look at the numbers for JEPQ. You ready? 37, the first one. 34, wait a second, hold on. Isn't 34 less than 37? Aren't they like starting out not good? Because aren't you supposed to get more profitable, not less? Why is it going backwards? Why is the second dividend lower than the first dividend? Well, that doesn't make me investing my money does not make me comfortable if last month they made 37 and this month they only made 34. Well, it's not a huge amount, but it's almost 3, which would be 8%. 8% decrease from one month over the next. Okay, let's give them one. All right, hold on. It gets worse. It does. All right, 37, 34, that's once. 40, 54, 38, that's twice. 68, 54, that's 3 times. 57, 44, there's 4 times. 43, there's 5 times. 45, 48, 35, that's 6 times. 36.7, 36.6, that's 5 times. 45, 41, that's 7. 41, 42, 34, that's 8. This thing keeps doing it over and over and over again. 50% of the time, this company, JEPQ, profits go up, they go down. They go up, they go down. Remember that old dance? 1 step forward, 2 steps back, 1 step forward, 2 steps back. Why the hell are you putting your money into a company like that? I'm just curious. Now, you're perfectly capable of doing whatever you want, all right? But you ask my opinion. I don't do companies that aren't consistently profitable. JEPQ, hell no. We can do SCHD. It looks almost just as this one. Okay? I like consistency of profitability. Let me show you what it should look like, just for the fun of it, so you get some kind of idea. Okay, let's take a look at one. Maximum. Oh, take a look at this. 1986 to 2025. Well, that's more than 20 years. I only want to go back to 2005. Because 2005 will be 20 years. Okay, so let's take a look. 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, 83. Every single year, the dividends went higher and higher and higher and higher and higher. Well, that's what I'm looking for. There's about 300 companies that look just like that. So why are you putting your money into JEPQ, 3-year-old company, SCHD, less than, what was that, around 3 years also? But think about it. They're not consistently profitable. So why are you doing it? Okay, hold on that thought. Let's get out of here. Let's answer some questions and look at some stocks. You don't want to hear me rambling all the time. Okay, you know me. You said Kroger was a no, but I still made 5%. Wait a second. Kroger, KR. Okay, now I'm not quite sure when you asked me about Kroger. To be 100% honest, I don't remember what day that was. But look at, okay, up, down, up, down, up, down, up, down, up. Here's the high right here. Then it dropped down to here. Now she's shooting up from this bottom here. Okay, so the last 30 days, why would I say no to Kroger? I would have said yes to that. Here's your bottom, 1 day, 2 day, third day, right there. Okay, this was Monday. See, Wednesday was the bottom, Thursday was higher, Friday was higher, Monday, it was a yes on Monday. Okay, she went up Monday, she went up Tuesday, today she pulled back a little bit. So I'm not quite sure when you heard me say that. Okay, now every single one of my podcasts are recorded and on YouTube. So we are recording at the moment. This screen here behind me is currently live on YouTube, so you can go and actually look at the small numbers. Also, after the show tonight, this will be available for you to rewatch. So, hi everyone. Okay, hold on. Kevin, listen to the rules. I strayed away and lost my shirt today with Wolf. Thank God I bought puts, or I would have blown my account up. I strayed because there wasn't much in my price range. Ooh, Kevin, dude, sorry about that, man. You did what? Wolf? Now, we looked at Wolf last night, I'm pretty sure. WOLF. Holy cow. Yeah, I'm pretty sure we did look at Wolf last night. Okay, here's the high. She drops, goes back up. Now she's going back down again. Okay, big gap down today. Tomorrow might be an interesting time to jump in if you like Wolf. I particularly don't because it hasn't been around long enough. But that's what I said yesterday. Hasn't been around long enough for me, and it's in a little bit of a downturn at the moment. So for me, yesterday was a no. All right, Miranda, good evening. Okay, already did that question. All right, EPLD. What the heck is EPLD? EPLD. We'll take a look at it. Okay. It's me, Dan. All right. Dan, you like SCHD, not for covered calls. Okay. It's me, Dan. JEPQ is good for dividends only. Okay. It's me, Dan. Bitcoin of die. I have no idea what that means. SCHD then. I don't like that one either. Those stocks don't give you capital appreciation. I'm not looking for cap. See, Dan, you weren't listening. I specifically said this as we started. If you're looking for capital appreciation, you're in the wrong place. Okay, you're basically wasting your time here. I appreciate you being here. I appreciate your interaction. I appreciate the questions. Really, I do. I'm here for education to help people out. But if you're looking for capital appreciation, you're in the wrong place. I'm looking for cash flow, not capital appreciation. I'm not putting my money somewhere and sitting and watching it. I'm 61. The money I have has to work, has to give me income on a weekly basis so that I can pay my bills and live comfortably. Okay? So no, I'm not looking for capital appreciation, and you're most likely be better off somewhere else. Okay, Lemonade. What if a dividend stays the same? Okay, let me ask you a question. How long are you going to stay at a job getting the exact same pay year after year after year after year after year after year? Changes your thinking a little bit, doesn't it? If you buy a company and it stays the same year after year after year after year, that means they're not being profitable. Do I like Walmart, Jimmy? Yes, I do like Walmart. I think I have some. I'm not quite sure. Are you buying Pfizer? I don't believe I have any Pfizer, but I did buy some last year. But we'll take a look at the numbers for Pfizer and see what it looks like. Jose Perez, how are you today? Good time. How are you? Gates Goza, good evening to you too. Jose Perez, que pasa, amigo? How can I join the community? I'm new to all of this investing world. Now, Jose, what I tell people who are usually really new, I usually tell them, come by every night, learn what you can for free before you pay for a service that you might not understand yet. Okay, the education here is free. You don't have to pay anything. I'm not asking anyone to pay me anything. Okay, I'm doing a video documentary for my kids showing them, hey, every night, this is what I do. To learn what I do. So 1% every week, that's 50% a year. If you compound it, you could double your money within 14 to 15 months safely. And that's the big one. Safely, that's big, especially when you get to my age where I don't have the luxury of losing. Okay, which means the money I earn pays my bills. And that's what we do in life. We work 30, 40, 50 years of our life. We put a little bit here, a little bit there, a little bit there. We put it away. And then when we retire, what kind of lifestyle are we going to have at that point? Well, mine's pretty damn good. So far it is. Should I buy S&P 500 stocks at the dip? Holy cow. Okay, S&P 500. You're talking about SPY. Okay, you need to seriously. Certified Vinci Boy. Vinci Boy? Okay, certified Vinci Boy. Do me a favor. Go into whatever financial website you use. Take a look at the dividends SPY has been paying out over the last, 5, 10, 15 years. Have they increased consistently? Then take a look at what the current yield on the S&P 500 is, SPY. The current yield. Jacob, how come everything seems to drop around 12:30 today? Was it because of Bitcoin hitting a new high? Now, Jacob, you're under the impression that I sit in front of my computer all day. I don't. Okay, 9 a.m. I jump on and I have a live trading call with a morning trading group. Okay, it's a paid service, but every morning I jump on at 9. And I'm done when people are done asking questions. I will stay on until you're done asking questions. Well, after we're done asking questions, I think today it was like 10:30. So it was like 9 to 10:30. After we're done with questions, I turned the computer off and left. So I have no idea at all what happened during the day. I do my positions first thing in the morning. When I say the 10-minute trader, literally mean 10 minutes a day. So after 10, 15 minutes a day in the morning, I walk away and go about my day. And then I don't turn my computer on and look at my account again until the following day. Okay? Money is only a very small part of your life. There's so many other segments of your life. This is just one. So why spend a lot of time on this one? Now, granted, finances they can be very let's call it crappy, for other words, lack of better words. You're trading your time for money, and then depending on how you want to live, you got to pay all the, it can be frustrating for some. But if 10 or 15 minutes every day, you can make enough to satisfy all your monthly obligations, that should be the goal. Everyone should have that as a goal. Whatever your monthly obligations are, your goal should be able to have. What was my job before? I've had a bunch. I was a fisherman, lobsterman, carpenter, contractor. I owned a manufacturing company before. I was a CEO. I even worked at a restaurant. I washed dishes. Okay? I was a server. I served dinner. I was a banquet server. I served the wedding party. Anyway, let's keep on going. So where were we? Do you personally teach? Yeah, we already did that one. More questions, more questions. Okay, more questions. Here we go. Where is the chart? The chart for what, Stephen? Now, Stephen, please do me a favor, okay? Anytime you ask me a question, you got to give me more information. Okay, I have 7 channels going, which means I have 7 chats going. One here, one there, one there, one there, one there, and then one down here. I can't keep track of all of them. So when you blurt out 4 words, you got to give me more to go on. I do look at each and every single one. I use Fidelity. I don't use Fidelity. I looked at it once. I've been using this for about 20 years. Okay, I wrote a book over 20 years, about 15 years ago, 15, 20 years ago, something like that. Choosing the right trading platform. I found this, and when I found this thing, I've never looked at anything else because this had everything I was looking for. How do you feel about SCHD? Holy cow, didn't we just? No, we didn't. We did JEPQ, and I told you SCHD was just as crappy, but nobody wants to listen to me. SCHD. All right. Hot today, SCHD, okay? Schwab U.S. Dividend Equity Electronically Traded Fund, SCHD, $26.01. Let's take a look at the numbers, okay? Okay, it goes back to 2011. Okay, 2011, 4 cents, 4.6, 6.6, 7.5, 8.2, 8.9, 9.9, 10.5, 13. 10 went backwards. 11, 11.5, 8, it went backwards again. 11.7, 14, 16, 20, 16, backwards again, that's 4 times. 20, 16, that's 5 times. 19, 21, 23, 19, 6 times, backwards. 22, 25, 26, so on and so forth. The company doesn't have 20 years of dividends, number 1. Number 2, they're not consistently increasing. Number 3, check this out. We're going to go to the summary page, and we'll see what the yield is for SCHD. Okay, we already know the dividends aren't consistent. Okay, here's the summary. Do you see this right here? The yield. Do you understand what a yield is? It's the rate of return. Okay, so if you put in $100 and a 4% yield, you put in $100, at the end of the year, you're going to have $104. That's a 4% yield. Well, inflation was higher than that last year. This year's lower. But anyway, besides the point, 4%. Year-to-date daily total return, negative 2.2. So I think just as much about SCHD as I do of all those electronically traded funds. Okay, take a look at the numbers. Don't take my word for it. Whatever I say, don't believe a word I say. Look at yourself. Whatever financial website you want to look at and use, you do that. What's the high of the year? What's the low of the year? What's the volume? What's the open, the high, the low, the close? What is their yield? What is their dividend? These are important questions you should know before you buy anything. So why would you buy SCHD if they're down 2.2% for the year and they only pay 4%? I'm at a loss. Why? Do AVGO. We'll get that one. Darren, what's happening? Love your channel. Thank you. Okay, Simple Clo. Tesla has no dividends. Okay, the channel, okay, the show, whatever you want to call it. You're in my presence. My presence is dividend investing for weekly cash flow. Rule number 1 is never buy something you don't understand, which Tesla has no dividends. So I'm not quite sure why are you suggesting it. Now, every once in a while, I will buy a stock that has no dividends if it is on Warren Buffett's list, which I don't think Tesla is on Warren Buffett's list. Feltar, SOC. What the heck is SOC? Seriously, it's a valid question. What is SOC? SOC. Sources. No. Well, there you go. It's a no. Thoughts on target, TGT. No. Look at that. Here's your low, here's your high. It's dropping, big gap here. What's going on? Okay, I don't like to buy anything. Now here would have been perfect. Here's the bottom, turns around, goes up. Well, is this the bottom? We don't know. It could go down lower tomorrow. If it goes down tomorrow, well, we're going to be looking for the bottom. Where is it? When is it going to show up? You day trade? No, I do not day trade. How do I feel about General Electric? Swan, I love General Electric. GE, General Electric. It's going to be a no. I don't buy at the high. Now, we're kind of curious. It's like you should know what it is you're asking me to look at. Now, if you knew General Electric is at the high of the year, why are we wasting our time looking at it? Do me a favor. Anytime you want me to look at something, at least have some kind of clue what it is. Okay, General Electric is a great company. It is, but look where it is. It's the high of the year. You could have saved us a lot of time, a lot of wasted time, by knowing ahead of time why you want me to look at something. What do you think about SMD? What the heck is SMD? That's never a good sign when I say, what the heck is this? Okay, two things. SMD has no options, and two, the computer can't find SMD. So I think that's your answer right there. All right, next, AVGO. AVGO. No. Wasn't that quick? It should take you 3 to 4 seconds to decide whether or not it's a yes or a no. We're looking for 5 things. You ready? Here we go. Number 1, the high, right there. Number 2, the low, right there. Number 3, where was it a year ago? Way over there. Number 4, where is it now? Right there. And number 5, what is the motion of the ocean? Up, sideways, up, down, up. Not that difficult. 3, 4 seconds. That's all it should take. Okay, and it's a no. The reason why it's a no, look at the last 30 days. Here's your bottom. Here's your top. Okay, I'm not a pioneer. Do you know what that means? That means I don't want to go into new uncharted territory. It's never been this year higher than this. So what makes me think that just because I'm buying it, it is? No. It went from 170 to 229. That's $60 increase. $60 increase on a $170 stock is about 30% increase from here to here. Do you really think it can go higher? Well, fine. You put your money in it, not me. I have very strict rules when I'm investing. And that's probably why I'm doing halfway decent. GFL. Never heard of it. GFL. No. JPM. JP Morgan. No. Okay, look where it is. Last 30 days. Here's a 30-day bottom, 30-day top. Now she's coming down. However, I'll put JP Morgan down for 2 weeks because from here to here, it's going to take about 2 weeks for them to be done taking profits. So JP Morgan 2 weeks from today. All right, that's that. LHX. Never heard of it. LHX. What is it with you guys in some of this stuff? Okay, A1 Steak. Come on, dude. You've been here long enough. You know I don't do monthly options. Yet You suggested it anyway. Okay, we already looked at Lockheed Martin. GFL, we already looked at that one. Bros, never heard of it. JP Morgan. We already said no to JP Morgan. All right. Buddy W Shirt. Isn't W Wayfair? Okay, Wayfair hasn't been around for 20 years. And besides, your high was here. Now you have 2 weeks to the downside. It's still dropping, Wayfair. Okay. Bellaboo and Marley Boy. Good evening. Uh-oh. Echo Rider wants to take a look at Dow. We looked at Dow last night. And Dow looked pretty good last night. Don't look good today, does it? Okay. High low is look at the motion. Down, up. Okay, what's happening today and yesterday? Well, let's take a gander. Talk about your sour grapes. Here's your top, here's your bottom, shoots up, now she's coming down. We did write down for 2 weeks from today because when that baby drops down to here, I want to be there to make sure she goes to the upside. And I'm there. Skiddy. Is that right? Skiddy? Fun? F-U-N? I've never even heard of a stock called Fun. Six Flags. Aren't they going under? And by the way, it's a no. I don't do monthlies. Sabrina. Good evening, Sabrina. Jack, good evening. Mike. We did last night. You said looked good. Okay, Mike, you got to tell me which one that was. We looked at a lot of them last night. Dow, Laurie, we looked at Kroger last night, and it was a win at over 2% premium. All right, Laurie. LMT, just type in bar. I have no idea what bar means, but hold on, hold that thought for 1 second. BAR. BAR. Granite Shares Gold ETF. Hell no. What the hell are you thinking, dude? Eli Lilly. No. I forget what it is. But Eli Lilly's out of my price range. That much I do know. DKS. Isn't that Dick's Sporting Goods? Yeah, I'm pretty sure Dickies hasn't been around that long. And besides, look at the last 30 days. Okay? Bottom up. Big drop. Now it's still going down. No to Dickies for this week. Maybe next week. Or write DKS down next week. Okay. Nathan, Netflix. Okay, hold on. NFLX. NFLX. Yeah, that ain't fucking happening. I don't know what you think. Why would you think I would want to spend $1,100 per share? I'm not quite sure what you're getting at, but okay. So, Laurie said we looked at Kroger last night. So let's bring up Kroger again. Yeah, because yesterday, this is what we would have seen. This is what we saw last night. Okay, here's the bottom, jump up, down, 1, 2, 3 days to the upside. Yeah, it looked perfect on Tuesday and Wednesday. Okay, we didn't know it was going to pull back today, but it looked good yesterday. I don't know if I even bought any yesterday. I don't think so. Awesome documentary. Can't you have cash flow, or capital appreciation and cash flow? Yes, you can. But that's not what I'm teaching here. I'm teaching cash flow only. Okay, so if you're looking for capital appreciation and cash flow, hey, I think that's great. But I'm not teaching capital appreciation. I have no desire whatsoever for capital appreciation. I have a requirement for cash flow. And when you retire, you'll have the exact same thing. You got a couple of choices. You got your what is that? Social Security. Well, I'm a little too young for Social Security. I'm only 61. Okay, they keep pumping it up. They want us to work until we're 72 before we get Social Security. Well, I'm not relying on it. My money's got to come from somewhere. It comes from my investments. 1% a week is plenty for me. Awesome. Altria. I love Altria. I do. Now, I got rid of my Altria just recently because I couldn't make any more profit off of it. Okay, so I jumped in at 50. It went up, it pulled back, it went up, it pulled back, it went up. Okay, at some point, no matter what I did, I couldn't roll it far enough forward for it to make sense. Okay, so if I roll something forward and it gives me less than 1%, well, it doesn't make a point. It doesn't make sense to roll it forward. If the stock is up, now if the stock is down, you got no choice in the matter. But if you're in a profit and you can't roll it forward to make any more money, that makes sense. Well, it's time to let it go. So yeah, I did let it go. I picked up some US Steel and something else. CSX. CSX. What the heck is CSX? Wait a second. We're still doing Altria. So here's the last movement for Altria. Okay. She goes up, she pulls back, she goes up. Perfect opportunity to jump in on Monday. Okay, here's the bottom, 1 day up, 2 days up, 3 day up. Perfect opportunity to jump into Altria. I didn't because, I had other things. GILD. What the heck is GILD? Gilead. Yeah, Gilead. It's pulling back also. Okay, 30-day bottom, up, down, up. 30-day top was yesterday. Not the time to jump in at the top. That's the time to jump out. All right. CSX. What the heck is CSX? CSX Corporation. Interesting. It's going to be a no also. But I'll put it on the list for next week or 2 weeks. Look at this. The beginning of the month shoots up. Now it's time to pull back. Well, think about it. This is what we've been saying. You got a 30-day bottom, okay? When it's low like this, people saying, well, hell, it's low. It's a great company. Let me buy some. Great. Well, the stock goes up. Well, it went from 26 to 31 and a half. So 26 to 31 and a half. I mean, count it. Count it in your head. 26 to 30.